It is a day when you would not want to be looking at the screen because the only color that you can see is red. The green is hiding in places that you would not be able to find gainers on the indices. You're watching Midcap Radar live from the CNBC-TV18 Motilal Oswal studios. I am Hormuz Fatakia. With me is Vivek Iyer. 1,000 points lower on the index. Some very choppy moves that you are seeing over the last few minutes. The index has oscillated between losses of 950 to 1,050 points, and that is of course as the sell-off on the Dow futures has been intensifying. 1,650 points now down on the Dow futures, and at this rate all three benchmark indices on Wall Street will open at 52-week lows and will also be in bear market territory, which is a 20% correction from the top. The broader markets too, not any better, 4.5% down on the mid-cap index. The small-cap index, similar quantum of losses as well. The metals index is down almost 8%. That's the one that is taking it on the chin, and 5% lower on the small-cap index as well. There are plenty of stocks that are at a 52-week low, but Vivek, at this rate, you are nearing. The only solace at one point was that you were trading above those lows of the 4th of March. Now you're below those levels as well. Below those levels as well. In fact, quite a few of the stocks are, like you mentioned, near 52-week lows. And if you pull up the advanced decline ratio, that is what is painting a very poor picture. The advanced decline ratio declines are far outpacing the advances, indicating the kind of sell-off that we are seeing today. Advances at just 100 as far as NSE is concerned, and declines well over 2,550. In fact, some time ago, our colleague Sudarshan just put out a flash on the screen indicating that almost 10 lakh crore of market cap were eroded in a single trading session, that is in today's trading session, and we still have a couple of hours to go. What exactly is the clear pain point today? The entire export-facing economy, so names like the entire metal pack, that particular index is doing very poorly. The IT index continues to see a significant sell-off. The sell-off has actually abated a bit, but still this particular index is down close to 5%. And the pharma pack, surprisingly today, opened deep in the red, but the pharma index too has recovered from some of those losses. But a whole host of other stocks is what Vamakshi has on her list. This is our special segment, Midcap Movers. Vamakshi is at the wall to take us to the midcaps that are moving around in the session.
Well, good afternoon, Vivek. It's a loud and deafening growl from the bears this time around. The mid-cap index is reeling under a fair bit of pressure. And let's look at some of the stocks that are actually contributing to those kind of moves. We have a lot of metal names featuring on this list. Lloyds Metal, Jindal Saw, as well as Godavari Power and Ispat. All of these counters are reeling under significant pressure. Nugent Software, an IT name, is also reeling under pressure. But apart from that, several other IT stocks, Coforge, that stock is seeing a downtick of almost 8%. Sonata Software, Birla Soft, as well as Intellect Design Arena, all of these counters are beaten down in trade, trading somewhere around 7% lower. The Realty Pack 2 is taking a big knock in trade today. Look at the move on Sobha. That stock is down nearly 9%. Godrej Properties as well has dipped to the day's lowest point, down 7%. Prestige Estates as well as Brigade Enterprises as well taking a knock in today's trading session. Apart from this, let's also look at some of the stocks that have managed to hit an all-time low today. This list includes Brainbees Solution, down nearly 10%. TBO Tech also down 6.94%. Afcon and Ecom Drug also make it to the list. But on the flip side, there are only a handful of stocks that are managing to hold in the green. The list is includes very few stocks, and this actually includes GMR Airports. That stock is up 2% in an otherwise very weak market. Delivery as well, on the back of that acquisition that they announced over the weekend, up nearly 2%, and so is HPCL, up nearly 1.5%. So overall, the picture looks quite grim.
Indeed, Vamakshi, thanks a lot for that. You just add one more name to that list that has just sprung up in the last couple of minutes, and that is Vedant Fashions, not Vedanta, but Vedant Fashions. That has seen a very sharp spike in the last few minutes of trade. Now 3.5% higher on the stock there. Be interesting to see if there is a development that has taken place on the stock that at one point was up 3.5%, is still holding on to gains of around 2.5%. So another stock that is bucking the trend in today's trading session is Vedant Fashions. Let's also welcome in Ruchit Jain of Motilal Oswal Financial Services for a quick chart check. Ruchit, good afternoon. Thank you for joining in. 950 points down on the index. You would see the positives of it, saying, at one point they were down 1,050. But what are the charts indicating now for the Nifty? Do we see a dash back to the June 4 lows, or do you see a reversal from these levels? And your stock recommendations as well this afternoon.
Yes, hi, very good afternoon, Armas. Well, if we see the historical charts, then I think this 21,700, 21,900 is a very important support zone for the markets, because in the last year in 2024, during the month of February to May, these were the 4 months where we had seen some consolidation in the market, and this entire consolidation phase, whenever there were dips around 21,700, 21,900, they were getting bought into. And today, post that huge gap down opening, we have seen still markets are trading around those 21,700, 900 range only. So I think this is a very crucial pivotal point. So if 21,700 gets breached, then yes, we would open up for that June 4 lows, the election results day low, which was around 21,300 levels. So I think very difficult to take a call, considering that markets are reacting more on the global markets news flows rather than any kind of structural movement as of now. So we are advising our clients also to be very light on positions and avoid any kind of aggressive trades on either side. If 21,700 breaks, then I think that would open up no opportunity to go short for another 400, 500 points. And as far as stock ideas are concerned, as I said, not going very aggressive. So only they would recommend one stock idea, which is a buy call in HPCL. So clearly, in this market where the crude oil has fallen significantly, about 15% in last 3 days, I think the OMCs could do better from current levels. Even technically, if we see HPCL has not even breached its 40 or 50 days exponential moving average support. So relatively in such kind of market, I think the OMCs should do well. So from a trading perspective, traders can look to buy HPCL with stop loss below 349 for potential targets around 390.
That's right, HPCL near the day's highest point. OMCs are set to benefit as crude oil prices slip significantly lower. But as we now slip into a short break, here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen. Well, welcome back to Midcap Radar. Well, the market has made a bit of a recovery, especially in the last 15 minutes. Select stocks have rebounded quite significantly from the day's lowest points. Hindustan Petroleum, a stock that Ruchit just indicated, that particular stock has rebounded quite sharply. Delivery, that stock after the acquisition has seen a significant rebound. That stock is up almost 2.5%. But Mangalam is here with more details on Delivery and the acquisition and what it means for the entire logistics space.
Well, if you look at Delivery, it's been a big recovery from the lows, and that's largely because of the acquisition that it made over the long weekend. It had made an announcement of buying Ecom Express, one of its competitors, for around 1,407 crores. Remember, Ecom Express is an end-to-end logistics solutions provider for all the e-commerce companies. And the big questions, let's get answers to that. They've acquired this company for 1,400 crores in cash. Remember, Delivery, as of last reported numbers, they had around 5,500 crores of cash. So the affordability bit comes in. Where can they afford it? Yes, most definitely. The second part is that the business that they've acquired is, sub one-time sales. If you look at it over the last 3 years, the sales of Ecom Express have been around 2,300 to 2,400 crore and now 2,600 crores itself. And it strengthens the command of Delivery over e-commerce logistics. Secondly, what it also does is it's available at, or it's come to Delivery at a lower discount, an 80% discount to its previous valuation. So a lower valuation is something that the street has liked, Delivery having paid for this company itself. But there are a couple of flies in the ointment as well. The first fly in the ointment is Ecom Express FY24 losses at 255 crores. So can this acquisition of Delivery turn it around on the bottom line or not? What are the kind of synergies that they expect? And the second part is that Ecom derives nearly 50 to 60% of its revenue from one large client, which is Meesho, which has also been looking to diversify from its vendor base itself. So could that impact the revenue for Delivery coming in from Ecom Express or not, are a couple of things that we'll have to keep an eye out on. But net, the fact that the company has gone ahead and made this acquisition at a valuation which is at 80% discount to what it was last valued at is something that the street likes and believes that maybe Delivery can extract some value. Delivery itself on its part has been quite an underperformer, so any sort of inorganic move that improves prospects for growth of the company have also been cheered by the street.
Indeed, and Delivery among the few names that are bucking the trend today at the highest point of the day now, 3% higher is the stock. But a slew of FMCG updates also came out over the weekend, and Godrej Consumer was one of them. Mangalam, tell us more on that.
Godrej Consumer is the other stock, Hormaz, I'm happy to report, which is in the green, and that's a long way because it had paid its dues in the third quarter itself. Third quarters, it reported flat volumes, very poor revenue growth, big margin compression, and the company had said that the next quarter their focus will be on reviving volumes, and that's exactly what has happened. Between third quarter and fourth quarter, there has been an improvement. In fact, this year on year, the standalone volumes of the company have grown by about 4 to 5% or mid-single digits, so to say, along with the revenue growth in high single digits for the India business. More importantly, their margins also have remained stable on account, despite the higher inflation that we've seen in palm oil prices, etc. What has this business been led by is the mid-teens underlying volume growth in their home care business. Remember, the personal care business, which is the soap business, the company had to take some price hikes because of the higher raw material prices. So as a result of which, there was still decline out there. It's in transition phase, so mid-single digit decline in personal care. Home care has led the business this time around. EBITDA margins same as third quarter, despite higher inflation in palm and related derivatives, is a positive. The stock, which had been an underperformer, is now outperforming. At a consolidated basis, we are expecting high single-digit revenue growth along with mid-single-digit volume growth as reported by the company. So that's a positive, despite the weakness that we're seeing in the market.
Thank you so much, Mangalam, for joining us and giving us all of the updates as far as the FMCG pack is concerned. But Rima is also joining in now. Rima, Kotak has written a very interesting note on the entire IT pack today. What are the key takeaways?
Well, their whole report is about the bear case scenario. That is, if the US and the other developed economies go into a recession, then what is the potential downside for Indian IT companies? For starters, on growth. Now, currently, their base case is that the world doesn't go into a recession. So for FY26, they're anticipating a growth of low to mid-single digit kind of a revenue growth. But if there is a recession, then in FY26, IT companies will degrow. Their estimate is that for FY26, the top line growth will decline by 2 to 5%, and in FY27, it will be a very modest growth of just 1 to 5%. They also expect a higher revenue decline for companies more exposed to retail, manufacturing, and discretionary spending. On margins too, they anticipate margins will come under pressure because of pricing. Clients could ask for productivity benefits to be passed on in the event that there is no growth and clients are hurting themselves. There could be a mild appreciation of the rupee versus the dollar and just limited levers. At a time when there is no top line growth, there is negative operating leverage. So top line growth in FY26 declines, margins come under pressure, and therefore, their model shows about an 18 to 35% decline for IT companies in the event of a recession. But again, this is not their base case; it's a bear case scenario. So the target price for IT companies in the event of a bear case by Kotak is up for you on your screen, and the potential downside compared to Friday's closing level. So for TCS, for Infosys, for an HCL Tech, Coforge, they're anticipating a decline of close to about 20%. But for Emphasis and Persistent, the decline could be as steep as 30 and 35% respectively. Back to you.
Rima, thanks a lot for that, and some sharp recovery that you're seeing from the lows, at least on the index now, 870 points lower. Of course, mind you, this is a very choppy moves that we are seeing. 150 points off the lows of the day now is the index, back above the mark of 22,000. So we'll keep an eye out on that one. HPCL is still at the highest point of the day. Some more stocks have made their way into the list of gainers, and Linde India is one of them. CCL Products is one of them, but the recovery is being led by the FMCG names, HUL, Britannia. Those are the ones that are contributing to the recovery on the index. Trent too at one point was down 18%. That is now recovered some ground, still down 15, but still some recovery from the lows of the day. Take a short break, get you more on the markets and specific stocks on the other side. Stay tuned. Still 930 points lower on the index, and there are plenty of names that are in the red as we speak. As you can see, the number of stocks that are gaining between 0 to 3% are just 12, and between 3 to 5% is just 1. And if you see the stocks that are trading with losses of over 5%, that is 214 stocks in that list. Lloyds Metals is one of them, 13% lower. Godavari Power down 11, Nugent Software down 11, Jindal Saw down 10.5. Massgaon Dock 2, a 9.5% cut in today's trading session after a 7.5% fall last Friday. And with that, the stock has now fallen below the offer for sale price that was the floor price of the offer for sale, that was 2525, and 2300 is now where Massgaon Dock is. But it is time for our special segment, Quarter Se Quarter Tak, as we now bring you earnings expectations from each sector. Today, Rima tells you how the fourth quarter is likely to be for the IT sector. Rima.
Here's what the IT sell-off tally looks like now. Nearly 17% in the last 3 trading sessions and 27% down on a year-to-date basis. So it's a clear reflection of the macro uncertainty and the sluggish demand. Now let's get to the numbers for the March quarter. No major IT company is expected to report positive revenue growth in Q4. 0 to -1% are the estimates. So it's going to be a very soft quarter for the sector, and the macro uncertainty since the start of the year has only added to the seasonality, leading to delayed decision making and tighter tech budgets. Let's get the numbers up for you on your screen. According to the CNBC-TV18 poll, TCS is likely to be flat, Infosys down nearly 1%, and the rest of them are likely to report a decline between 0 to 1% on a quarter-on-quarter basis. But the mid-cap IT performance, especially some of the high-growth IT companies, is likely to be much better, particularly its persistent Coforge and Emphasis, where you're likely to see a growth of about 3 to 4%, and for Emphasis, you could see the best growth in the last 3 years. But the fallout of the Trump tariff-induced macro uncertainty is going to hurt Indian IT, at least in the near term. We could see 1, delayed decision-making, 2, stricter, tighter tech spending, budget cuts perhaps, and thirdly, the street was anticipating discretionary demand to come back in FY26, but that is going to be delayed. So with so much uncertainty, the risk is, what if the IT majors decide not to guide? Now, here's what Kotak said in their note last week. It may be prudent on the part of companies to defer guidance until there is more certainty on the demand environment, or restrict the guidance to the next quarter where there is a higher degree of visibility. But if they decide to guide, these are the projections that the street has put out. 2 to 4% approximately for Infosys, but there are some who believe it could be maybe 1 to 3%, 1 to 4% if they want to factor in a wider range given the uncertainty. JP Morgan is at 2 to 5%, slightly on the higher side. EBIT margins for Infosys seen between 20 to 22%. HCL Tech, again, seen largely between 3 to 5%. Some may be at 2 to 5%. Margins between 18 to 19%. And Wipro's Q1 FY26 guidance could range from -1 to +1. Now let's get to the sectors which are impacted the most and who has the highest exposure. We know retail, logistics, manufacturing, and companies like HCL Tech, Tech Mahindra, LTI Mindtree, and Infosys have higher exposure to these companies. Coforge, Persistent, Emphasis have a lesser impact, according to Kotak. Now, the big question is, after such a big fall in IT stocks, where are the valuations and are the stocks attractive? JP Morgan last week said, keep IT positioning light. Conservative guidance could drag the stocks lower, and that could create fresh buying opportunities. Kotak also cautions that if we hit a recession, there is more downside in IT stocks. If it's just a slowdown, there could be reasonable upsides. Now, the growth projections for FY26 are very muted. We're talking about like low single-digit kind of a revenue growth, and PE valuations are still a tad bit expensive on a relative basis.
Thank you so much, Rima, for joining us and telling us about what exactly to expect as far as the IT sector is concerned. Remember, TCS reports its results later this week. Earlier today, we spoke to a whole host of market experts to understand their opinion on the markets. Let's listen into what Arvind Sanger, Managing Partner, Geosphere Capital Management, and N. Jayakumar of Prime Securities had to say.
I am skeptical if EU chooses to retaliate, which they're indicating they might do in the next 24 to 48 hours, then what we have is the 2 biggest trade blocs. The problem is that if the major economies in the world, like China and EU, decide to dig in and take retaliatory action, then things might have to get a little uglier before they get better. So I don't think Vietnam is going to be enough to turn the ship around. I think India's deficit can be, like you said, fixed. Don't forget LNG. We import LNG largely from Qatar, but US is the largest LNG exporter and has a lot of capacity coming on. India could sign deals with American companies on LNG, and obviously US is an oil exporter. So those are easy ways to show President Trump that India is serious about cutting its deficit.
The important thing is, other than, as I said, this market access thing, which is intangible for now, the numbers around which the tariff was built, that's to my mind easily, well, I say easily, I think it's immediately addressable. But the more important thing is they also talk about sectoral tariffs. So there are 3-4 sectors, whether it's steel, whether it's steel and aluminium, what they do in terms of branded items on the pharmaceutical side, I think they will leave out generics. So there may be certain sectoral numbers, which is outside the scope of this 25 or 10 or whatever the numbers are. So the auto number at 25, I think, will remain. Market access side, frankly, I don't think anybody has an easy solution. This will have to be, in some sense, smoke and mirrors, some sense, real access, but it will take a while.
Expert opinion coming in there on the recent market sell-off. By the way, the Nifty is still down 930. There is a minor recovery that has been seen in the Dow futures, if you would like to call it that. From 1,650 points, the Dow futures are now down 1,250. So some bit of recovery, but still a sharp knock is what you are expecting Wall Street to begin trading with. Some other movers then in today's trading session, other than the ones we just spoke of. Newgen Software is down 11%. Brainbees, one of the stocks that Vamakshi highlighted in her list, is down 10.5 as well. And Walkhard continues to remain locked in a lower circuit of 10%. Nalco too down 9%. JSW Infra down 9%. But a lot of these Tata Group companies are the ones that are taking it on the chin. But with that, we call time on this edition of Midcap Radar. From Vivek, me and the team that put this show together, thank you so much for watching. Closing bell to take you through the final 90 minutes of what has been a very forgettable trading session.